Yeah, I mean, unsurprisingly, given the price action we've seen, it's been pretty bearish. This was a name that typically saw calls outpacing puts pretty comfortably for ages, and that situation has reversed. We've also seen that the price of 5% out of the money puts relative to 5% out of the money calls is pretty much as bearish as it has been, in the last 5 years. So I would actually suggest that probably indicates that we're closer to the bottom. One of the things I think that people could take a look at, if you actually think there's some further downside, I wouldn't buy premium. I wouldn't spend premium to do that, but you could use something like a 1x2 put spread. I was looking out to April and looking at the 225 puts and then selling 2 of the 195s against it. That trade could be put on for pretty much even money, and if it did pull back a little bit further, you could profit from that. In the few instances where we've seen pullbacks of 50% or more in Tesla, the average move down has been about 57%. Now, since the stock's already down 50, that means another 14% from here. And actually, to Bonawyn's point with respect to where you get to it at 30 times. 30 times is probably about $130 a share, so that's going to be a lot lower than we are right here. But I think something like a 1x2 if you want to lean into it on the short side, but you are going to get long at 165 if you do that.